It's the 31st of March 2025. The first quarter has already slipped by and there's been a lot of changes in our market. Officially, we're past the peak. Homes are no longer selling in a week. But what's happening beneath the scenes? We're here to take you on that journey today and just explain a few of the factors that we've seen in our local marketplace. Labor has delivered on its election promise and has reduced stamp duty, bringing the limit up to $500,000 and the concessional rate to $700,000. It's a good news for our first home buyers, but is it too little and too late, considering the average house price is now sitting at the $760,000 mark? How does WA stack up? It recorded a 14.3% growth for the last 12 months. Anything above 10% growth is a good market, and we're very positive about that, and it's great news for any investor. But where does it sit in relation to other capital cities? Now, we know the market was fantastic last year, and it's great to see that on a graph. If we track this purple line as we came up, you can see that we had our peak mid last year as the market has now tracked down. It's still in positive growth, but the rate of growth has definitely slowed. Let's take a look at some local suburbs and their market graphs. Starting with Armadale, you can see that we've had exponential growth over the last couple of years, again showing that peak 6 months ago with a slow decline ever since. And we're definitely seeing that in our day-to-day home opens. Byford is also showing an exponential graph over the last couple of years, but again 6 months ago we saw that rise stop with a flattening out. Hasn't gone down, but it's definitely flattened out, which is similar to our next suburb, Piara Waters. There was a lot of hype about Piara Waters at the beginning of the year. Fair few real estate commentators saying is one of the top 10 suburbs in WA to invest in. It too has seen a rapid change in the market after going up significantly over the past couple of years. We've seen it turn that corner and head in the other direction. And that begs the question then, where is the rest of the market going? Now, we get asked all the times as agents, is the market going up? Is it going down? And I'm not going to give you an answer on that because I'm not a financial planner. However, an interesting graph that not enough people talk about is the affordability graph, and that tracks how much of someone's income is actually going towards their mortgage. Now, we saw in 2019 in Perth, that was low 20%. It is now sitting at 46%. That means if you earn $100,000 a year, you're putting $46,000 into your mortgage repayments. Sydney is sitting at 62%, significantly higher again. It is deemed that 60% is about the cap. Above that, it doesn't matter how much demand there is in a marketplace, people physically cannot afford to pay mortgage repayments. And that will naturally curve the market, which is what we've seen in Sydney. Sydney, in a time of rapid growth, everywhere else hasn't really seen the same amount of growth. Not because they don't have the demand, but because the people physically cannot afford to pay more. Wrapping up now, some key points, some key takeouts. It's a shifting market, but what does that actually physically mean for you? If you're a first home buyer, it's great news. House prices have come down. I'm not making any claims as to whether they'll keep coming down or go back up, but they are less now than what they were 9 months ago. If you own a home and you're looking at upsizing or downsizing, it's also the best thing ever right now because more homes are coming on the market. It's going to make it a little bit more competitive for you when you're selling your house, but it means you've got more options when you're buying. It's going to give you a bit more confidence to put your house on the market, knowing that something else will come up that you're going to be satisfied to live in. And so the moving and the transition side, which as agents, it was so hard to find people willing to do that in a market like last year that was climbing up by $10,000, $15,000 a month. It's crucial now as the market changes and more stock comes on the market to have a selling strategy and an agent with strong negotiation skills. So make sure if you are looking at making a move, that you do your due diligence and pick an agent that's going to work hard to get you a great result. That's all from me. My name's Ash from Team Ash at O'Neill Real Estate, and if you need anything else from us, feel free to reach out.